Alrighty, good morning everybody. It's Thursday, June 23rd, 2022. Want to just quickly go back to yesterday and show you what happened here. I didn't make any trade calls. I got a little bit busy right into the open there and wasn't really at the screen, but I just want to show you what happened here coming out of the open. We talked about again a potential bullish breakout, just based off of all the signals we saw from the lows, and then from I believe we also had a pretty good signal just before the open, maybe about 3 or 4 in the morning here on the Pacific. And so the expectation was for an attempt by the bulls to break out. And so let's see, the market opened right here around VWAP, started traversing out, and when it pulled back to the 200, came right to it. And again, one of these setups where we're talking about like 2 ticks on the ES of risk here, hits the 200, breaks it by 2 or 3 ticks, bounces off, tests it again with very limited risk, bounces off, and then for the third time, right into 50% of yesterday, right into the previous resistance spot there from the open and from just before the open, right into it, right into the 200, and continues going. And had you have gotten in on the first test, the market went about 70 points higher or more. And then both the second attempts here went more than 50 points higher. So even if you got in at the latest test of the 200 at 37.47, the market went, I don't know, let's say 37.50 to above 3800 for another 50 points. So some pretty good opportunities with limited risk there. And notice that each of these setups, first one was right to the 200 and our major retracement level. Second one was to the 200 and our minor eye level. In fact, the minor eye level would have given you a tick or two of a better entry. And then finally, this one lined up with our 50% power level. So beautiful stuff there right out of the open. Within the first half hour of the open, you could have been long and you could have grabbed, again, 50 plus points to the upside. And then sure enough, the market came up right into where? 38.07 quarter, which was our next expected resistance zone. And there should also be a major swing level that is not being denoted here on my 512 for whatever reason. So there's a nice confluence right here between '07 and 12. That's why I told you yesterday that would be one of our expected resistance levels. Sure enough, the market came basically less than 2 points from the '07, the lower end of that region, and failed. So that's where we find ourselves coming into the open. We came right into that resistance level, pulled back, and let's zoom out a little bit here. Got a nice, beautiful, healthy retracement of this leg up from the lows of the day before. Came down, and I believe we just held right around these, right around the, let me get the number here. Yeah, right around the 61.8, I was going to say. Almost exactly right near the 61.8. So right into the 61.8 of this leg, and we got this bounce out. So now the question is going to be, are the bulls going to hold? Because a lot of times what we see in a fib leg is a nice push up, a pullback, a hold of the 38, the 50, the 61, and then finally hits the 61 and breaks out to the upside. So the question is, holding that critical level, are we going to see the bulls go ahead and break out to the upside this morning? So let's go ahead. We'll go up to our daily chart, see if there's anything new to pull out of that chart, and then come down and get our levels for the morning. So let's go pull up the daily here. So remember, we've been talking ever since this low back on June 17th, coming into, I guess, the beginning of this week, the nice bullish divergence we got from the lows, very similar to a couple days before that, where there was an attempt by the bulls to break out and then they failed back lower. So again, this week we're coming in with a nice confluence of bullish signals from the Monday or from the Friday lows coming into this week. And we did get an attempt for the breakout higher. Excuse me. Got the attempt for the breakout higher, and we got smacked down right in front of that 38.07 critical level. And there is that swing level I said was right in between 38.07 and 38.12 there. So it came right in front of it. We failed, but right now, like I said, we did pull back and hold the 61.8 of that leg, and then we also are holding just about the 38 retracement of the whole push up. If you go from the low of Friday of last week all the way to the high of yesterday, I'm sorry, we're holding the 38 right there. Okay, so candle from yesterday looks a little, why can't I select that now? Interesting. It's not letting me select the fib leg that I just okay, that was weird. So yesterday's candle, looks a little funky there. A little bit of indecision. Maybe a little bit of an argument that we will break to the upside here with such a huge wick to the downside. But again, it's anyone's guess. These are somewhat ambivalent looking candles here, if you ask me, outside of the doji we got down from the lows. So let's go down the 4 hour. Don't think there's really anything to add here. We do have, and I want to zoom back here really quickly, the daily can't really eke out any type of divergences within the last 2.5 days of price action. But going down to the 4 hour, we got a nice bullish divergence. This was part of why we did expect maybe there would be a push higher yesterday through the high of the day before, because we did have the 4 hour, the hourly, and the shorter time frames all giving a bullish signal from the 3 a.m. bar here. So when it did break out to the upside, that was the expectation. And now that we came up right into, again, right in front of that swing and right around that 38.07 to 12 area, we have a bearish divergence very similar to what we saw coming into yesterday morning. So we had a confluence of bullish signals yesterday that told us to expect a breakout to the upside, and now we have a confluence of bearish signals from yesterday's high. So the question is going to be, is that going to hold for a continuation lower? And right now, like I said, we're holding right at a critical level, about 38% of the whole push up from Friday's low, and just about, I think I said what, the 61.8 of the smaller leg right here, right there. So critical area here to see, are they going to hold that and go ahead and push through the high of yesterday to come up and maybe push into one of these higher areas? Or are the bears going to keep the market down below the high of yesterday and bring us lower to break the low of yesterday and come back down to test the low of last week? So on the 60-minute here, we're going to look at all of our levels that we're going to be dealing with coming into the open. Again, 60-minute had a nice clear bearish divergence from yesterday's high, but then we also do get a nice little bullish signal here in the overnight price action from the overnight low. And that has led again from, and look where we bounced. Not only was it a nice 38 retrace and 61.8 retrace of the two legs, it's also right into our minor eye level again. I'm telling you, these levels work unbelievably. Now, I did update one thing from the eye levels, and that is I got rid of 37.70 half. That was kind of a tentative level, and just judging from, again, all the previous price action and then from the last 2 days, I decided it's no longer the type of level I want to have on the chart. It's just not lining up with the major structure levels. So I took that off. But again, right into our minor eye level at 37.35, got a beautiful 1 hour bullish divergence, and now we have this attempt to break out to the upside. So a great level to hold. Everything lines up there. But again, are the bears going to stay strong and swat this sucker back down? That's the question. So if the bulls do continue to remain strong and they can get through the high of yesterday, that's really the first most important thing, is can they get through the high of yesterday? Look out for the levels we talked about above us. Everything above us and everything below us is exactly the same. It hasn't changed since our first session on Tuesday of this week. We've got all the same levels. Nothing's changed up above there because we haven't made new lows. So let's look at it. Remember, you can never discount the possibility that even if the bulls get the pullback and start to bounce out, they very well could come just a few ticks above the high of yesterday, right into that zone, and then fail. Right? You never know if that's going to happen. So just because we do end up peaking through the high of yesterday, it doesn't mean that the bears are done. It could just be a little peek through, or maybe even a peek back up to the 22 area, and then all of a sudden we find ourselves back down to newer lows. You never know if something like that's going to happen. But let's just, for argument's sake, say the bulls do rip out, and like I said, the critical thing is to get through the high of yesterday. We're going to be dealing with, and let's go at the more interim levels here. Again, 07 quarter, basically the high of yesterday into 38.12 here, and that major swing right around 38.10. That pocket there is still in play. And remember, a couple months ago, we had all these levels stacked very close together, and we would see the market come up, fail at one, come up, go right up into the next one, fail the next day, then the next day come up, break the high, come up just a little further, fail again, right? So that's not out of the realm of possibility to see a lot of messy stuff like that, but we have those there. 38.22 would be the next stop, and then if the bulls end up breaking through there and they get through the high of, I believe, let me zoom out here, basically the high of last week. Technically, the high of last week is all the way up at the gap. But for regular trading hours, from the New York Open, that's basically the high of last week. So if we can get through that area, it's then up into the major retracement level, which lines up with 38.53, our minor eye level. So watch out for that. And then there's this swing here that I marked, and it's basically 38.57.50 to 38.58.50. That right there, again, I know these things are close, but if they end up going through this area, watch out for that level there, that little 1 point range. There's some stuff that lines up going back, major supports from that area, and then we kind of pushed through, bounced through it, and then we broke through and never really came back from the other side to test it. So be aware of that. And then a little bit further from there, we're right back to the next major eye level, next major swing, right around 38.75. And then here's our gap, 38.79, I believe, 38.78 half, all the way up to 38.97. All right, so watch that stuff. Do I expect some type of major break through all that to break out through the highs of a few weeks ago? Not really, but it's always a possibility. So any further from there, and it's all the levels I've been talking about, for the whole week now. On the other side of things, if the bears do keep the market down and they do break through the lows of last week, which are down here, this is down at 36.39, then we're going to be dealing with all these levels down below. That, again, I listed out for you starting on Tuesday of this week. So you should be aware of all the potential support levels down below. Remember, these are the most important structure zones. These are where we see the most, these areas of consolidation and major supports, and things like that. So be aware of all these levels down here. And now I want to jump to the 10-minute chart and get into all the levels we have down between the low of Friday and the high of yesterday. So let's go take a look at those. Remember that, again, we have a confluence of bearish signals from the high of yesterday, but on the pullback here, we do find support at a very good level with some decent bullish signals from here as well. There's more weight on the bearish signal from up here, but again, we do see some good stuff from here, and it's right at a good level that would make sense for a breakout. So that's what we're looking at this morning. Potential for a breakout. If it doesn't occur, then we're back down into all this stuff that I want to talk about right now. So let's look at it on the 10-minute. One PSA here, we do have some news coming out. About 15 minutes after the open, we do have PMI composite coming out. So again, potential there could be some type of jump or reaction in the market at that point. And then we also have Powell speaking again half hour after the open. So just be aware of that stuff. So on the 10-minute here, just like we saw on the hourly, a nice bullish signal from that pullback. and from the pullback, sorry, down here at 37.35. Very important level. In fact, it hit our eye level to the tick. And now on the pullback here, more close to the immediate time right now, we have a nice little 10-minute bullish signal as well. So we'll see if this can continue to push here. So the levels we're dealing with between the high of yesterday and the low of last week include the power levels, right? So we have our orange power level and the 50% level there, and we have the close of yesterday all right here. And look at how much chop occurred right inside of that area. So maybe not the most ideal level to be trading in, but we do have those levels there. We have the major retracements back down right around 37.42, right around 37.22, and right around 37.02. Give or take a few ticks there. So be aware of the major retracement levels, be aware of the power levels, and then be aware of our minor levels here. We have 37.35, which looks like ended up working beautifully here. We have this shaded area, like I said, right around 37.24.75 to 37.25.75. There's a potential for there to be a reaction right there, so we want to be aware of that. And then we have this area here. The reason that's such a widely shaded area is because we have the minor eye level at 09, but we also have, if I zoom out and go back, all of this resistance that we got back on Friday of last week. A lot of resistance right there at 1350. We came into it, we made a double top here, and then got a major pullback from there, and then a lot of trouble around 3709 that basically held all throughout Friday, through the Globex of Monday, and then through our little short trading session on Monday. And then going into Tuesday, we pulled back and basically held that area in general and then bounced out. Now I know it was a little messy in here, but we did end up holding it for one spike up into there. And so coming into this morning, I think that major swing there at 1350 would be a relevant level if we came back into it. So we have that little area right there as a potential support, and then we're down through that 61.8 retracement to the low of yesterday and our minor eye level at 36.90. And any further than 90, I think will open us right into 36.81, the major eye level. If that doesn't end up holding, we've got the minor level at 62. And if you just zoom out and look at the minor and major levels here, they basically line up with all of these little pockets of support and resistance. So we've got that pocket there. A little bit further, there's a little tiny pocket right in here. Okay, and then any further from there, we've got the bigger pocket from 36.33 all the way up like that, right? And then you can see right here, this 36.62 level. Oh, look at this, all this support around this area, some resistance. And then again, once it breaks, it comes down. We didn't quite get to the next major structure area around 33. We got a support just a few points in front. So anyway, I digress. So that's what we're dealing with this morning. Those are the pockets that I think will make the most sense for potential support and resistance. And the idea here this morning is if the bulls can rip through the high of yesterday, we would expect there to be an attempt for a breakout in the context of a very heavy bearish market. So even if the bulls do get some type of traction and they do get a little bit higher, the expectation is still for the bears to swat it back down, just like they've been doing for months now. So I'll leave it at that. I will not be here for this morning's trading session. So for everybody out there watching, good luck this morning. Be safe, and remember, go with what the market's doing. If the market is breaking out, you might as well look for some opportunities to get long. And if we are getting a major rejection, rather than trying to fight the bears, you might as well jump in on their side. So have a great morning. I will be back tomorrow, and we'll see everybody then.